What is an option contract? An option contract is a contract of 100 shares of stock. For example, Apple, Tesla, Adobe, stocks like that. You have the right, but not the obligation to buy 100 shares. You could buy calls or puts. Calls bet that the stock is going to go up. Put bets that the stock is going to go down. Let's look at this option right here, the Adobe. So we're gonna go to the option section, click trade options, and as you can see, it says we could buy right here. So we could buy either calls or puts. So remember, guys, call means that you're betting that the stock, Adobe stock, is going to go up, and put means that you betting that it's going to go down. So for example, you're betting that it's going to go up. You're going to hit the call option, and then you're going to choose one of the strike price right here, over here. And then, you could decide if you want to buy it or not. And if you decide you want to bet that it's going to go down, you could go to the put, go to one of these strike price, and then you could, buy the strike price or not. It's basically another more advanced part of option trading where you could sell covert calls. Here, guys, I pretty much use technical analysis and fundamental analysis to help me determine where I would like to get in if I decide the stock is going to go up or not. So basically with technical analysis, we want to draw a line across top on this day chart, right? So right here is where the stock increase, and then we want to say we want to add a resistance line. So we're going to put a line of straight across because this was the top price right here, and straight across, that's going to be our resistance line. So what that means, the stock is not really going to pass that line in that particular time. And then to be our support line, we're going to find like a lower part of the stock. So for example, say here, you're going to draw a support line down here. We want to have a support line and a resistance line. What I did to determine where I want to get in, I went to this 5-year chart right here. And at the time when I was buying the Adobe option, I pretty much came to February. So Adobe was about 320.54. So what I realized was there's something in the news. Is you scroll down, you can see like different news stuff that pops up right here underneath the stock. It was a little something controversial happening with Adobe, but it wasn't something that's based on their earning and how profitable they are. I drew a line all the way from the bottom here, all the way out, and then I kind of like retrace the step of Adobe, backtrack. So Adobe haven't really hit that level since about 2020, guys. So that's about 3 years. And overall, Adobe has been trading up here, as you can see, for the most part. Even went all the way up to 688.37. So when it came back down this level in February, I was like, wow, this is on sale. So I pretty much decided I wanted to get in. If it did get a little bit lower, based on my technical analysis where I drew a line underneath the bottom, which is the lower part of this chart right here. So Adobe hit 293.61, and again it hit about 270. It hit about 275.20. So from basically decided that even if it gets lower, it's still worth it because it's not that much that it went down. So I decided that I'll take that risk. Obviously, I was hoping that it could come down so I could buy more contract, but it didn't really come down, as you can see during this time. You can see right here, it pretty much came down. It was at this level, then it went up a little bit, then it came down a little bit, then it started going up, guys. And then by that time I was in, came down a little bit again. And I believe I bought some contracts for my wife. And she made about 1,500 just by investing about 200 and I believe $270, something like that. And then it just kept going up, guys. So as you can see, my technical analysis paid off. After I acquired all those information about support and resistance, I pretty much came over to the option and I said I wanted to buy a call option because I'm betting that the stock is going to go up. And then I chose an expiration date. I wanted to choose an expiration date a little bit further out. We're from about 6 months to about 2 years out, that the stock is going to go up. I chose option contract 6 months to about a year out, and I came up to the expiration date for about January 2024, and I chose the 580 option contract right here. And at the time when I purchased this contract, the price was about 390. You can see the price right now. It's about $6,080. You'll see this number right here. Any number, like even though this seemed like $60.90, they usually round it up because it's times 100 shares, guys. So this this number times 100 share, that would be $6,090, guys. Remember, you have the right but not obligation to buy or sell 100 shares stock. So this is times 100, so that's why it's going to be $6,090 for this. Currently, right now, this is the option contract right here. The chart for it. Pretty much when I purchased it around this time right here, and you can see it was about 390. So it's $390 right here. And as you can see, it drastically increased over time. It went all the way up to about $9,968, less than a year. This is the power of what option can do, guys. How I made over $8,500 from one option contract. So on February 24th, I decided to buy Adobe call option for 580. At the time, Adobe was about 320 or so, and I bought it call option for 580 for Adobe, and the expiration would be in for next year. So it's about a year and a half away. At the time when I bought this, it's about 390. So it cost me about $390 to buy this contract. And by the time I sold the Adobe contract, which I sold about November 17, 2023. I sold it for about $84.90, and after the regulatory fee, I got about $84.90. I'm sorry, $88,489.97, and then we subtract what I paid for it, which is about $390. So I made about $8,100 just from this one contract, guys. And this is the reason why I was able to make this amount, is because I basically was in the money, because at the time I sold the Adobe contract, Adobe had hit about $602 or so. So I was pretty much in the money way before expiration. So this contract went up but over 2,000%, guys. So in this contract, I made, as I said, about $8,100 just from this one contract. This is just one of my contract, guys. So this is just the power of option trading, guys. And you could also lose money, but in my case, where I buy a call option saying that the stock is going to go up over a period of time, it's basically, if it had went the opposite way and it came down during that time, I could have lost $390, which would be the max I could lose. I could only lose the what I put in with this kind of strategy. Could earn endless amount of money, guys. I could earn, this could have turned, if I hold this contract, it could turn into 16,000, 20,000, you know. So this is the power of what we can do to use to make a lot of money. But keep in mind, it's very risky, guys. I use technical analysis and fundamental analysis when I made this call option, because I had noticed that the stock was at a level that it hadn't really been in a long time. So I'm going to show you on the chart. All right, so here when I bought it, as you can see, it was about February. What day did I say? February 24th, and the option was about 320. Now, if you look back in the history, in like 2020, right, you can see that this stock, I'm sorry, hasn't hit 320. The level 320 was around April 20 2020, right? And if you can look at the chart right now, you can see that it just has been up from 2020, from about let's say May 2020 to about say August or September 2022. So that's a long time, guys. So the potential that the stock was going to go back up is very high in my opinion. It could have went down a little bit, but as you can see, the one of the lowest level it has been over the years is about 440 or so, 390, 389, 360. And then it had hit come to 284 on September 23rd, 2022, and then from there it has been up for the most part. So when I saw it came down in February of 24th, I was like, man, this haven't been this level in a long time. So I use support and resistance, guys. This basically in the Robinhood app, it's more challenging to draw support and resistance lines and stuff like that. But pretty much what I did was I said, let's go back to the chart, to the other one. I said basically, say the support is down here, right? I bought it about February 24th, right? And then say the resistance is at this level, right? So now what this is showing me, which would the support would be the bottom line, right? So in February of 2023, February of 2023, as you can see, the support line will be right under this line right here, coming straight across. And then the resistance line, I would draw it to where it has previously been like a high, like a medium high, which I would say maybe about 465, 466. And then here it had hit 445, so around this level, I would say resistant level. So as you can see, it's a decent gap, and the chance of it going up was pretty high, as I said. Plus, there's fundamental, where there was a news that came out around that time. Something strange was happening with some Adobe thing, but it's nothing based on like, it's just some news, and it just happened that seemed like people were selling the Adobe, so it came down drastically, and I was like, man, I gotta get on top of this. But the whole thing that I'll say is that I'll recommend doing some fundamental analysis and some technical analysis when you're making these decisions, because as I said, you can lose money and you can make a lot of money, but it all depends on what you see in the market, as far as, do you see that the chance of it going up is pretty high. And sometimes you can be right, but sometimes things happen in the world, like could be maybe something happened in the government, right? Some war or something broke out, some thing in the world happened, so it can make the stock go down. But if you do your research, it's a position that whether that's a call or a put. So I recommend make sure that we do our extensive research and make sure that we're making the right theories. So if this happened, then it's this going to happen. Maybe leaps that's within 6 to 2 years, 6 months to 2 years out, so that you have a lot of time, so your option could increase in value, right? Versus if you do like a 1 day expiration, you can make a lot of money, but it's very risky. You could also lose a lot of money. But that's for another video. That's what I want to share with you guys real quick, guys. My little take on how I made about 8,101 of my contract with option trading. So if you guys enjoy the content, feel free to subscribe and like the video. Let's get it. All right, guys, something I want to talk to you guys about real quick is the Greeks. So pretty much the Greeks are a factor that you could use to determine how your option contract is going to be affected. So for example, to determines how much your option contract is going to move every dollar your stock goes up or go down. Theta determines how much your option contract is going to lose each day it goes by. Personally, I use only delta and theta because those are the most important thing to me that I need to know about my option contract right now. I want to talk about expiration date. Placing expiration date, it can be very dangerous, guys, because theta determines how much your stock could lose. So you can lose a lot of money quickly the closer your expiration is to strike price. So personally, now I like a lot of leaps. As you can see from my example that I showed you guys, that has helped me gain a significant amount of profit. Leaps are pretty much long-term equity anticipation security. So you pretty much buy an option contract for about a year or so out. Personally, I like leap because you have more time on your contract, guys. You remember what I said about the Greeks? If you have theta, you can lose a lot of money quickly the closer your expiration is. When you have a leap contract is further out, you have to sell it within 3 months, 6 months, 1 month, depends on where you want to get out of the contract, guys. The key thing is that you have time. You have a lot of time, so you're not gonna lose your money's not gonna lose a lot of value with theta. If you guys are interested in more information, let me know down in the comments below. I'm also making a course that you guys could get a lot more information about option trading and explode your account. This is some more strategies that I personally use increase my outcome. How to trade options on Robinhood for beginners. All right, so first thing that we're going to do is look for the specific stock that we want to trade. So for this example, let's do Apple. We're going to Apple. So once we're in the stock, you could see the different about the company. You could see the statistic, news, analysts, trades, and so on. So once you go to the specific stock, you're going to hit trade and you're going to press trade options. From there, you're going to see some different expiration dates up here at the top. You could choose the one that you want to choose. So let's say, for example, October 18. Once you click on the expiration date that you want to choose, you're going to see the strike price on the side over here. You can see the strike price is right here, and you could also see the share price right here. You could also see the cost for each strike price. For calls in the money, the strike price is going to be below the current share price or stock price. And if you're out of the money, the strike price is going to be above the current share price or stock price, as you can see in this right here. So that's more out of the money. Now if you're betting that the stock is going to go down, you're going to press the put button over here, and then you're going to see the different strike price here, and the strike price that is in the money would be above the current share price, and if it's out of the money, it's going to be below the current share price. Calls is betting that the stock is going to go up, so you can make money as it go up. And put is betting that the stock is going to go down, so you can make money as it's going down. Now, if you look up here at the top, there's a buy and sell. We're buying calls or put, we're not selling. If you're selling calls or put, that's another strategy, which is we're not going over right now. So you have to have at least 100 shares of a company in order to start selling options, contracts. So once you click on the specific strike price that you want to go into, so for example, this 235 call strike price, let's click the button. You're going to see the prices here. You're going to see 0.37 for this particular example. When it says 0.37, it's not 37 cents. It's going to be $37 because we have to get 100 shares of the specific contract, because in option you have to get 100 shares of the contract in order to get the option. So for this specific example, it will be 39 cents times 100 contracts, which would be $39. And then Robinhood has this regulatory fee, so you may see the fee as well. So once you do that, then you could put the amount of contracts you want, 1, 2, 3, 4, 5, or so on. And then you press review and you swipe up, and then it's gonna get you into that option. Now you have something called limit order and market order. So in order to choose limit order or market order, you press this button up here. You press that button, then you could go to limit order or market order. Market order is pretty much where it's at, is where people are asking for that specific price for the stock. So you can't adjust, you just press the amount of contracts you want to get in, 1, 2, 3, 4, 5, or so on, and then you press review and swipe up. It's going to get you into the trade at that specific market order. And if you wanted to do limit order, you press the limit order button, you press the amount of shares you want to get in, 1, 2, 3, 4, 5, or so on. And then you could also change the price that you want to get in for the specific option. So if you press this arrow down here, you're going to see a mark order, a mark price, so 0.375, which would be about $37.50. And the last trade was about $38. And you could also see bid and ask up there. So people are bidding for about $36. Somebody's bidding for asking for about $37. Now when you see the mark order, that's like the mid price if you want. So when you press that arrow down, you're going to also see something called the Greeks, which you got Delta, Gamma, Theta, Vega, Rho. And I personally like to look at the Delta and the Theta. So Delta is going to determine how much your contract, for every dollar the stock goes up, how much the option is going to increase. And Theta basically how much money you can lose within a specific time. So the closer the expiration date is, the more money you could lose, and the further out the expiration is, the less chance of you losing a lot of money by holding the contract. So I personally like to use limit order most of the time I trade, because I don't like to have the market determine where I get in most of the time. So I'd like to use limit order. Now I'm going to show you guys how you could sell your option contract. So if you did decide to get your option contract, once you go to the option the stock that the option you're trading, you just press the trade button, press sell, and you could put in the price that you want to sell it at. You could put the amount of contracts you want to sell. If you bought one contract, two contract, 3, 4, 5, or so on, you could put the amount that you want to sell, and then you could put the price. If you're doing limit order, you could put the price that you want to sell it at, to put it at 440 because you want a higher chance of you getting filled. 440, and once you put 440, then you press review and swipe up, and if somebody decides to get that price, then you automatically get filled. Now if you wanted to do market order, you could click on a button up here, press market order, put the amount of contracts you want to sell, 1, 2, 3, 4, 5, and so on. Once you hit review, you swipe up, and it's automatically going to sell your particular option contract. There you have it, guys, how to trade options on Robinhood for beginners. If you have any question, let me know in the comments. Remember to like, share, and subscribe. Let's level up together, motivate some more people. Let's talk to you guys about how to trade options for beginners on Webull. All right, so the first thing that we're going to do is look for the stock that we are going to trade. In this case, we're going to do Apple for the example. So we're going to come right in the search section and type Apple. Once you're in the Apple stock, you're going to see the different time frames as you scroll down. As you can see, we have the 5-minute, daily, weekly, monthly, quarterly, etc. You could also change the time frame on the 5-minute. As you can see, we could go to the 1 minute, 2 minute, 3 minute, 10 minutes, 30 minutes, and so on. So in addition, if you click this button right here, you could change from candlestick to line chart. So you can see now our chart is showing lines. If you want, you could just go back to the candlestick right here. So in addition, if you click on this button here, you could add some indicators. You have the MACD, the RSI, volume, Bollinger Band, VWAP, etc. So you could use those indicators to help you with your trading. So in order to trade the option, we want to come to the option section here and click on the option. From there, we're going to see a lot of different strike price, and you're also going to see some different dates here. So once you click on a date that you want, you could scroll, move over. You could have you see the volume, open interest, implied volatility, delta, all theta, all that good stuff. Some of the Greek. You also have bid and ask. So if you don't see delta or any kind of the Greeks in your chart, you could come to this button right here, and you could hit the column section, and then you just go and click on the one that you want to show, delta, whichever Greek you want to show. So in this case, delta. Now, in order to trade, we're going to look at the different strike price. So when you look at the different strike price, you have in the money and out the money. So in the money is pretty much the strike price is going to be above the current price of the stock, and out the money is going to be below the current price of the stock. This is for puts. Now if you go to calls, in the money is going to be below current price, and out the money is going to be above the current price. All right, so once you come down here next to calls and puts or both, you could click on you see single options or covert call, and some other strategies that you could use. In this one, we're doing the single option. You have covert call, straddles, vertical, butterfly, condor, etc. But we're not going to do those ones right now. We're going to just focus on single option. Once you decide which strike price you want to go in, you're going to click on the number, and it's going to ask you to put in your password on Webull. You put in a password, you're going to come to the option contract here. You're going to see the mid price, and you're going to see the ask and the bid. So the mid price is pretty much where you could potentially get the stock at, and the ask price is what most sellers are asking for right now, and the bid price is what most buyers are asking for right now. But the mid price is where you could potentially get it at that mid price. If you do limit order, so you have limit order, you have market order. I personally like to do limit order because I feel like we're more in control of what position we get in. So most of the time, I personally like to do limit orders. We have the limit order here. We could set it, it says 176 for the price, for the mid price, 174 bid, and 177 for ask. We're gonna just put it to the mid price, or we could even put it below that, and maybe hit that number. And then we could put how many contract we want to get, 1, 2, 4, or more. And then we could also do the time. Do we want to enforce till it's canceled, or for the day after market closes? So as you can see, if we do for the day when market closes, usually close around 4:30 p.m. So, and if we do good till cancel, it will be canceled up to 60 natural days after the order is placed, according to this right here. And then from there, if you decide you want to get in, you could hit the buy button and then hit confirm. It's going to charge you a transaction estimated transaction fee, and then you just hit confirm. And then if you hit that number that you put it for the limit order, you're going to get into the trade, and then you have an option contract right there. If you wanted to do a market order, you just come to the section right there, and you click on market order, and then you could get, it's going to bring you in wherever the market is at currently. So if you want to get 1, 2, 3, 4, 5 or more contract, you can. And then you could do the same thing, time and force. You could do until day, and you hit buy and confirm, and then you'll be in the trade. So guys, there you have it for this simple way of trading option on Webull. Let me know what you guys think in the comments down below. If you want to check out my free webinar, check out the link in the description to check out a free webinar about stocks and option. And you could also sign up for a course that I have as well. That being said, guys, remember, let's level up together by subscribing, liking, sharing this video. This is how I made about $24,000 using $1,740. Let's get into this video. The first thing that I did was open my brokerage account. Then from there, what I did, I looked up the Adobe stock, and once I looked up the Adobe stock, I pretty much used technical analysis and fundamental analysis to determine if I would like to buy the option. From there, I decided I wanted to buy the option contract. Once I determined where I wanted to get in, I bought the option contracts. And as you can see, I sold some of my contract here and here. This is where I bought some of my contract. Where I bought some of my contract again. This is where I sold some of my contract. I bought some more contract. As you can see, I made about 24K. If you want me to go into more details about option trading, let me know down in the comments. Subscribe, like, share. Let's grow together. His glory. Peace. In this video, I'm going to teach you guys how to trade stocks on Robinhood for beginners. So the first thing that we are going to do is look for the specific stock that we are going to trade. So in this case, let's do Apple. So we type in the specific stocks and we look for it. And then From there, you could scroll down. You could see different information about the company that you're deciding to trade. You got news, analysis, trading trend, and so on. So once you on the stock on Robinhood, then you press the trade button there and you press buy. So after you press buy, you're going to see how many shares do you want to get. 1 share, 2 share, or 3 shares, or 4 or 5, and so on. And once you put in the amount of share that you want, you just press the review button and then you swipe up to submit it, and it's going to automatically get you the stock, because this is a market price. Now I'm going to show you guys another way where you could set the price at which you want to get the specific stock. So now if you want to get the specific stock at a certain price, you could press the button up here, shares. You're going to go to limit order, press continue, and then you're going to still type in the amount of shares that you want to get. 1, 2, 3, 4, and so on. And from there, where the price section is, you're going to put the amount of price, the price that you want to get it in. So right now there's a bid of people wanting for $227.82, and there's an ask for $227.86. And you type in the price, so you could put 227, say 80, and then you hit continue, and then you swipe up, and if the stock goes to this number, you're automatically going to get the share of the company for that price. And now I'm going to show you how to sell it. So if you have the stock that you're going to trade, you could press the trade button. For in this example, we have Apple, and then you press sell, and then you put the number of shares that you want to sell. So if you have 5 shares, you could sell your 5 shares. If you have 1 share, you could sell your 1 share, and so on. You could put the number of shares. You could hit the review button, swipe up, and it automatically would sell your share for that market price. Now I'm going to show you guys how to make it as a limit order. So as a limit order, you just, once you press the sell button, you're going to come to the top up here that says shares, and you're going to press limit order. Then you're going to press continue. You're going to put the amount of shares that you want to sell, 5, 2, 1, or depends on the amount of shares that you personally want to sell. And then you're going to see the different prices here, where you got the bid of 227.80, ask of 227.81. Say you want to sell at 228. Once you put the 228 and you put the number share, then you press continue, and then you're going to press review, and then swipe up to sell your stock at that specific price that you choose. Once it hit that number, then it automatically will sell your specific stock. So there you have it, guys. A simple way you could start buying and selling stocks on Robinhood for beginners. Let me know if you have any question in the description down below. Also, check out my free webinar if you want to learn some more information about stocks and options. With that being said, like, share, and subscribe, guys. Let's motivate some more people. Level up together. To trade stocks on Webull for beginners. Alright, guys, so the first thing that we're going to do is look for a specific stock that we are going to trade. Let's use Apple for this example. So we type in the Apple right there. You see Apple pops up here. Once you scroll down, you're going to notice these different time frames on Apple. You have the 5-minute daily, weekly, monthly, quarterly, biannually, yearly, etc. On the 5-minute, you could also change that to 1. If you look to the side next to the different time frames, you see a button here. When you click on it, you could change from a candle chart line to a line chart, just like that. And you could change it back if you like to do candle version. In addition, you also have a button next to that button where you could look at indicators. So in order to trade, we're going to hit the trade button here, and it's going to ask to put in our password if we have a password on Webull. Once you put in your password, you're going to see the stock come up here, and you could choose the order type. You could do limit order or market order. Order, you could set the price that you want to get in. So currently you see there's people bidding and you have people ask, so on. It fluctuates, and you could just put the limit price that you want to get in. So once you put in a limit order, you could just put the quantity, how many share you want, 1, 2. You could do the trading hours. Do you want it to be regular hours from 9:30 to 4 p.m. or good until cancel, or to the day? So if you wanted to do an order type of market order, you just select the market order type, and you could also select the amount of share that you want, and then you select also the time in force, good until cancel. All right, so once you decide that you want to get the stock either as a limit order or a market order, you could hit the buy button and then hit confirm, and then it should get you into the trade. And once you're doing a market order, and if you're doing a limit order, it's going to get you into the trade once you hit that number the price that you set it to get in. So that's how you trade stocks on Webull, guys. Simple. I would recommend doing technical analysis and fundamental analysis in order to choose the right stock to trade. Like, you could use sources like Yahoo Finance or MSNBC to help you with some fundamental analysis. Just check out my free webinar in the description below. So with that being said, remember guys, hit the subscribe button, like, share. Let's level up together. In this video, I'm going to share with you guys the difference between cash account and margin account. So a cash account is an account where you can only trade with money that you have available in your brokerage account. On the other hand, a margin account is money that is borrowed, so you could trade with more money than you put into the brokerage account. The risk with that is that you could also lose more money than you put into the margin. Margin account, you're limited to 3 round trips every 5 days. In other words, you can only trade 3 times out of the 5 days, and then you have to wait an additional 5 business days to be able to trade again the 3 times, so that you don't risk becoming a pattern day trader. You have to have at least $25,000 so that you could trade continuously with a margin account. If you have less than $25,000, you're going to be limited to 3 round trips every 5 days. That's the difference between a cash account and a margin account when you're trading. Remember to like, share, and subscribe. Let's level up together, motivate some more people. Remember, for His glory. Peace. High yield saving account versus option trades. So if you have a high yield savings account, you're getting anywhere from about 4% to about 5% currently. It varies, so sometimes you may even get less. Depends on how long you do the company, the high yield savings account company, or bank. So typically, as I said, you get around 4 to 5% currently. But in options, right? Imagine you have an option account where you're getting just 20%. 20%, guys. 20%, you could get that within a day, a month, or whatnot. You don't have to do that over a year. So you pretty much surpass your savings account just by getting 20% in one month, one day, or whatnot. And With that, you could also do it multiple times. So you get 20% here today, 20% a couple months from now, a couple weeks from now, a couple days from now. You don't have to trade all the time. Only when you see a good setup that you could get in and get your 20% in, so that your money is accumulating some money on it. You don't have to get the typical 4 to 5%. Keep in mind that can be a little bit safe for some people if they don't know how to trade or invest in things like that. Getting their getting the 4 to 5%. That's like you could just do that. You just put the money in there, and you know that within a year you get 4 or 5% or so currently. But if you know how to trade, then you could get more than that within with days, weeks, few hours, whatnot. Based on what you are, based on what your knowledge of trading. So, for example, right, I've been consistently getting 20%, um, on like a small account thing that I'm doing right now, the small account challenge thing, where I'm almost double my account from just getting 20% here and there on a small account challenge that I'm doing right now. And I'm already, as I said, almost double this account, and I don't personally currently, for this personal specific account, I don't trade it every day, and I make 20% here and there. Like it's amazing, guys. If you don't know these skills right now, I recommend checking out my free webinar. You guys can start learning information about this kind of thing, this kind of trading, so you can start making some money, and not living, you know, and not living to paycheck or worry or stuff. Once you have these kind of skill, it it's amazing. It's a game changer. Right? We level up. By the way, like this video and subscribe if you guys are getting some valuable information right now. Share with somebody that you think could be beneficial to, and let me know in the comments where you guys are from. All right, so let's get back to the video. So as I was saying, guys, you could get 4 to 5% currently from a high yield savings account. Nothing wrong with high yield savings account. If you don't know anything about how to invest or anything like that, or you don't job. um, a little one, she's going on a slide. Sorry. um, yeah. So if you don't know anything about investing, or you think it's risky, scary, all that good stuff, then you know you could you could learn about it, um, by reading your research, all that good stuff, looking into my course, my free course, all that good stuff, and start learning, getting this information, start building reps on reps, and build up, and get more information, so that it sounds, these information, they're not gonna sound foreign to you anymore like that, right? Um, but you could also do, and as a bonus, guys, some of these brokerage account that you could trade on, they also give you a certain percent. I believe Robinhood has right now, about 5.5%. So that's what I want to share with you guys real quick, guys. Give this video a like, share, and subscribe. If a high yield savings account is where you could put your money in a in a savings account where you earn anywhere from about, right now the rates are anywhere from about 2 to 5% or so, right? But in option trading, you could make way more than that. Imagine, with option trading, pretty much is where you have the right but not the obligation to buy or sell 100 share for contracts. So in option trading, you could make 20% in one day from just one option trading, and versus you having a higher savings account where you're only getting about 2 to 5% per year That's per year, guys, not per day or month or day or months or it's per year. So option trading, in my opinion, is a way that you could start fast tracking your money to start making it grow faster. Keep in mind, with option trading, it's risky. You could make a lot of money quick, and you could also lose money fast as well. You just want to have your proper risk management in place. You want to have your stop loss, all those things, so that you're not putting your money at high risk. So that you don't want to lose all the money you're putting in, right? So you just want to mitigate that by having proper risk management and being disciplined, not being emotional with your trading. It can bring out some emotion when you start option trading. By the way, I have a free course you guys could check out down the link down in the description if you want to start learning about option trading stocks, about some simple, it's a simple way to about option trading in my opinion, and stocks that you could start learning the skill of option trading, because once you start learning those skills, then you could make your money grow exponentially, right? But as I said, it's risky, so you want to have your proper risk management in place so that you're not losing a ton of money or limiting chance of losing money. As versus, with high yield savings account, as I said, you get anywhere right now about 2 to 5% within a year. In option trading, right? You could get 20% in a day, in a month, in a few months, versus a whole year where you're trying to get 2 to 5%. I personally grew an account from 500 to now over $1,000 so far, right? And that's only in a few months from option trading. So imagine I had put that $500 in a high yield savings account. Within a year, I'll only get about $25 or so, guys. So that's the power of how you can exponentially grow your uh your money with option trading. And as I said, option trading has a risk, so you want to be have proper risk management. By the way, guys, remember to like, share, and subscribe to this video. Let's level up together, motivate some more people. Let's go. So option trading, as I said, has its risks, but you want to have your proper risk management. You can mitigate some of those risks with the high yield savings account. You only get about 2 to 5% currently, and within a year, as I said, with the example that I give, the $500, you only have about $25 within a year, guys, from your $500. And I've personally grown my $500 with option trading to um, over $1,000 currently, and it's been less than a year, been a few months. So that's the part of option trading, guys. You want to make sure that you are having proper risk management. And if you are still interested in, nothing wrong with high yield savings account. If you don't know what you're doing with trading, I would say start off with high yield savings account. It's better than a regular bank account where you're not really getting any percentage off from my money. And start learning about option trading. You check out my link in the description. It's free. You can start learning about it and start growing your money exponentially. Yeah, with option trading, it's risks involved. But as I said, you could try to mitigate some of those risks by using proper risk management. You could put stop loss, all those things, so that your money is not at a high risk. So, and with option trading too, guys, one of the good things about it is that you can make money as the stock market is coming down. So the other day when the stock market came down a couple $100, um, people, you could just make money. You could just like get a put and say, okay, I'm betting that it's going to go down based on some technical analysis that you looked at. And you could also look at fundamental analysis, and you could say, okay, I'm gonna bet that it's gonna go down, and when it drops you still make money. So either way you can make money in option trading, but you want to have your proper risk management in place. And you can make a ton of money, but You can also lose a lot of money if you're not having your risk management and you're being emotional with the trading, which option trading can bring out some of those emotions because your money, especially when your money that you work for is at risk, it can bring us some emotion in some people. So just be mindful of those things. And as I said, high yield savings account, there's nothing wrong with it. But if you want to grow your money exponentially and take charge, then you want to start learning about option trading, trading, stock, all those things, so that you can start make your money grow exponentially. In some platform like Webull, they allow you to paper trade. So what that means is that you can use fake money to practice. So you use fake money to practice trading stock option. So you could just practice the skills that you're learning. And I also have a link down in the description. I believe you get a free stock if you sign up using the link. And I think I get a free stock too, but I think you get free stock if I'm not mistaken too. So you could use the link down in the description if you guys want to, start paper trading and practicing the skill of trading stocks and option without risking your own money. So start practicing. So with that being said, guys, remember to like, share, and subscribe, and let's level up together, motivate some more people, start growing our money exponentially, and remember, for His glory, peace. Let's go.